What is up, YouTube? Welcome back to the channel. And today I want to talk about Wyckoff. The Wyckoff method is a staple in my way of trading. And today we are going to dive into how I use it, some setups I'm looking at, as well as how you can use it in your own trading as well to potentially make some nice profits. So let's get started with today's video. All right, so we are at the platinum chart, but before we get started, I do want to tell you guys that on my website under blogs, there is FX free materials, and there you can download a free Wyckoff method ebook that I wrote myself. It's not about the basic information that you can find on the internet. It's just a bit of a recap about the phases, but I'm not explaining every different concept in there. I do tell you about how I use it and what are the most important points to keep in mind. How you can see if something is accumulation, distribution, those type of things, how you can backtest certain trades. So it's very, very helpful, and I've gotten a lot of positive feedback about this free ebook. So if you want it, just go to my website, cdfxtrading.com, then go under blog, FX free materials. There you can sign up for free, and there you can download it as well as find a lot of free information out there. So with that aside, let's go to the platinum chart. And I've spoken about this before because I've invested in it for the long term. I do trade commodities, shorter term, FX and indices. However, I also take long-term swing positions in instruments that I think are definitely going up in value the coming years. So this is a trade for years, not days, not hours, years. I entered at this area. I entered the long, and as you can see, price went up and now it's coming back to my entry. I didn't take profits because it doesn't fit with my plan. But if we look at this from a Wyckoff perspective, we've got a clear selling climax, which forms the low of the range. Then we got a clean phase B, and phase B is usually a phase where we see a lot of up and down movement. So this is phase A. And why is this phase A? It's because this is a clear change of character and a clear selling climax. Look at the spike in volume just before the base formed. And then the change of character means there is way more buying and a bigger retracement to the upside that we've had than that we've had in previous downtrends. So this is what started the downtrend. Then we've got some ranging, but when the real downtrend happened, we didn't get much retracements to the upside. But look at what happened here. A big ass retracement to the upside. And that shows me that something is up, and this is phase A of the accumulation range. So I never use trading view, but let me see if I can label this one. Jesus. Just going to label it the selling climax. Then we've got a second test, which is just below the SC, which can happen when you trade the Wyckoff method. So preferably you want it to be at the same level, but in this case, it didn't, which is totally fine. We got the STB there. And then we've got a clear spring. And why is this a clear spring? Because it breaks the low of the range. So it captures liquidity. Liquidity is usually resting below here. This is an unbroken low, but we've got way more unbroken lows here. These lows, these lows, these lows. So you can expect liquidity to be there. Price triggers liquidity and then quickly within the next few weeks moves back above this level and violently continues and breaks structure here. Now that's just a very, very bullish sign. I entered after the spring at a retest of this area simply because it lines up with the fundamentals, which I'm not going over in this video, but we do see a clear spring. Whoops. Let me put it in right there, clear spring. So we've got a clear accumulation range there. And what's also important is that it broke this very important swing low. And if you're familiar with my trading, this is a key swing point to the markets that I like to highlight and see how price reacts. Now, price falls through it and quickly goes back up, and it's in line with its accumulation range, and it's in line with the fundamentals. So this is just a very clear textbook Wyckoff accumulation example. And now we are retracing. Now, a lot of people, of course, know that markets break out and retest, but they usually draw their levels at the top of the range. So you got this high here, but it's just a swing point, but then they draw their level to enter the retest at that area. Now, I've been trading this method for around 5 years, and what I noticed is that price rarely goes here and then goes up. It usually goes to the last bit of structure before the breakout happened. This is the breakout level. This is the last bit of structure before the impulsive move that triggers the breakout. So that's the area that price tends to go to. So what I expect from this platinum is some slowly moving down to that area, and then a reversal. Now, I'm not going to predict. I don't have a glass ball or anything like it. I am already positioned in this area, but if I see a clear accumulation on the daily time frame at this area, I'm going to scale in some more buys and basically hold till I see a weekly distribution pattern, which will probably not happen for years. Why? So first of all, downtrend, then sharp move to the downside. And a lot of people buy, or in this case, sell, because they see big red candles and they think, all right, I'm shorting, big momentum to the downside. But usually strong candles indicate the end of a trend instead of the beginning of a strong trend. So that's a tip you can use in your trading as well. As you can see here, we have big green candles to the upside, and here as well. But as soon as there's a lot of buying, price collapses. Here again, strong move and immediately a reverse. So that's something to definitely keep in mind, to don't just blindly enter on strong momentum. What we do know, if we study Wyckoff, is that strong momentum usually indicates a selling climax, and especially if you combine it with this change of character. Look at that violent move to the upside. We haven't seen it anywhere in the previous downtrend. So this tells me something is up, and I'm not buying here, but this tells me, all right, this could be the beginning of phase A of an accumulation range. So let me mark in that area. Now, in this case, look at that. We got a test in phase B, which is above the level, above the low of the selling climax. So let me mark that in. And of course, yes, this is hindsight analysis, but I do want to talk about the important parts of the Wyckoff method, because I've gotten a lot of questions about it. So again, as you can see, phase B, a lot of up and down movements. Phase A is usually violent. Phase B is up and down movements, and usually the spring is also violent, which is in phase C. So let me put in this line over here. This is what I like to see. This is the highest probability setup that I have. I like to see an STB not breaking the low of the selling climax. Why? Because everyone that bought in this area usually puts the stop below here. And if the STB isn't below that area, these stops are generally still in the market. So if you then have a spring, it breaks these areas and triggers way more liquidity. Usually, again, I don't have a glass ball, but that's just the concept behind it. So that's what I like. I've been backtesting it over and over again, and these are the best setups. So then we have the spring, and it breaks both lows, triggers liquidity. So a lot of selling is happening below here, but the market doesn't go lower. Quickly closes back above both levels, and then quickly travels to the upside of the range. it doesn't break it, falls down, retests the origin of the move, and then a clean breakout at that area. And that is where I enter. That is where I teach my students to enter. That's, in my opinion, the safest place to enter. Yes, it does decrease your risk reward ratio, but it does increase your win rate and decrease your risk. So you can either enter at the spring, which I do have a mechanical setup that allows me to enter there just after the spring, but the win rate is way lower and I do prefer a higher win rate. So if I draw in this high of the range, so I wait for a clean break through the high of the range. That didn't happen here. Then this becomes the high of the range, and that's where we get the clean breakout. So if you entered here and just had a buy stop up there, you would have been basically squeezed a lot and maybe taken out before the real move happened. And how do I determine if it's a real or false breakout? Simply by waiting for a close through. False breakout, it triggers it, quickly closes above, triggers the breakout and quickly falls down. But here we get a close through and then price stays above it and then it takes off. So that's a tip you can use right there for your own trading. So if you're trading Wyckoff, the key points that I want you to take away are: number one, if you want to sell, don't sell on these type of candles because that usually indicates that the trend is over. Number two, a change of character either in phase A or phase C is very, very important and very telling. And then of course, the spring should be violent and I wait for a real breakout. The best setups happen when the STB is above the selling climax. So that's a bit about how I use Wyckoff in trading and investing. I hope you guys learned a lot. If there are any questions, let me know in the comments down below and I will help you out. So thanks for watching and see you in the next video.